The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. All right, good morning, folks. We are going to take a quick look at the chart that Norm Winsky sent us yesterday. As you'll notice, we had the equinox happening, and as you can see, it happened within 1.5 minutes of the exact astro time. That was the high in the S&P at that particular point. Doesn't work that way all the time, but the fact that it did work at that particular time is a little bit of an interest. Now we're going to move on and take a quick look at the German DAX here, because that's the one we like to start off with. Yesterday, when we were watching the DAX, we were looking for the DAX to get up and make a really nice ABCD expansion up at the 1.618 level. That was marked by that little red box that we were watching. And so what we're going to do now is to go forward, and you'll see what happened. Again, we just happened to be lucky on this one. It went right up to the exact 1.618 at that 10,690. It's already backed off almost 100 points from that level. Whether that's going to be the top or not, I don't know, but you can see that we have the ABCD structure that is also built right in at that point. When I was listening to John Logan's talking about North Carolina and the things in Charlotte and stuff, and the fact that they're having the Apple Festival in Hendersonville, North Carolina, where John Hill is from. And John, as you know, was my mentor back in 1970. And I used to drive down from Chicago when I was trading on the Florida Exchange during the 80s and visit he and Carol and Lundy and Holly and John Jr. And on one of my trips, I had a sports car, very nice sports car, and it was a new one, and I drove it down there, and John's son Lundy had just turned 16, and he was just absolutely. He asked if he could just sit in the sports car, so he it would just sit there in the driveway, and he would just sit in it, pretend like he was driving. So I said, John, what do you think? I should let him drive it? And he said, hey, it's your car. He said, he seems like a responsible young man. So I walked out and I gave him the keys. I said, look, it's a stick shift. He said, oh yeah, I know how to drive a stick shift. I said, just don't drive it very fast, because it'll move pretty quick. And so he drove it around. I was there for a week, and I think he drove it. Of course, we were working all the time on the opening price book, or the opening price principle. I didn't write the book until years later, but he drove it everywhere. He put 1,000 miles on that car in a week. In a little valley like that, it's really difficult. Anyway, when I was getting ready to leave, as I was putting my luggage in the car, I think I was leaving on a Sunday to drive back, I noticed that there was it was a Porsche. I noticed that it had a huge gash, and somebody had sideswiped the car. And so I looked at it and I figured out what it was going to cost, and I said, no, it was a 911S. The main one, my 356, I had sold that a few years earlier. Anyway, I just didn't say anything, and I just took it back to Chicago and went in. I lived at McClure Court, so they had, parking. They brought your car down from the parking lot whenever you wanted to use. I didn't use it very much, but I got the car fixed. It was like $1,200 to get it fixed. It was no big deal. And when they were driving the car down after they had fixed it, to show me that it had been fixed, the guy driving the car lost control of the car, driving it down the parking ramp, and hit both sides of the car, scraped both sides of the car. And anyway, that was it. That was the last time I drove the car. I got it fixed and sold it, and the the auto park place took care of it. So it was a joke. I never said anything to John Sr., but little John, or Lundy was his son. He always appreciated the fact that I never told his dad that he had wrecked his car. And what had happened was he was backing out, and he was not familiar with the, yes, it was Jink. He was not familiar with the stick shift, and when it jolted, he ended up sideswiping a truck that was parked that didn't do any damage to that, I guess. Anyway, let's get back to the markets. Okay, we looked at the German DAX. We got something really big happening today, folks. The British pound is now going down, and we're approaching the levels that were around Brexit. We're down near this 128 level. There's nothing to do now, but we really need to watch this very, very closely. I'll do a lot of work on this over the weekend with my good friend Jim Bartolioni, my trading partner, and we'll have some really good ideas on the next level, because there's some really, really strong numbers on the long-term British pound. Coming in around the 127.50 level. And yeah, it's been a very good one. You're right, Mr. P. It's been really spot on. So that's a very good one to be watching. So anyway, this is a Friday, of course, and so Friday in a down week is not going to see much of a reaction here in the British pound. But one of the things you want to do, and this is what I'm going to be doing this weekend, is I'm going to be looking at the euro pound and also the yen pound, because both of those will give you a better idea of what's happening than if you look at it just with the dollar pound, because the euro pound is really important, because they're both located in Europe, whereas over here we're trading against the dollar. So we'll see what happens with this, but we're going to do some work on it, because there might be something really big here going on. Now, yesterday we hit some really key numbers. We were watching the long-term pattern, of course, in the Nasdaq, which went right up to that level we were looking at 48.80. But also we were watching the crude oil market, if you recall, up at the 46.50 level, and I wanted to show you what happened here. This is the first one we're going to take a look at. We had a dollar drop after we hit the 1.618 level. We dropped all the way down to the 45.50 level, and then we've rallied back, and what we did is we actually came up and we made a higher high in crude oil than we did yesterday, which is very unusual. Still right at that 1.618 level. So this is telling you the importance of this level. Anything above 46.65, I would think that you'd have to think this as being very, 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 very what I would think would be very, very powerful. Now, I'm going to post something into the den on Fibonacci numbers and how it relates to astrology, if you like that sort of thing. It's about a half hour long, but boy, it really explains how these numbers, sort of fit together, if you like that sort of thing. It came from one of our listeners here in the Tiger Den, and it's really, really very good if you have a chance to take a look at it. But it's very, very interesting. Now, let's switch over. We got another one that is very, very interesting, too. They're all very interesting, but some are more interesting than others. Let's just take 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and there's been some talk about the Wells Fargo CEO stepping down, and he will get $200 million as a golden parachute. I think they should probably call it a diamond parachute at that price, but the stockholders are the ones that are getting ripped off on this. The board of directors should be able to, I know they want to hire the best, and these are done by headhunters, and the headhunters and the attorneys write these contracts because they want to get the best of people. But to give people that kind of money is just, to me, insane, especially when some of these folks have done very, very poorly and still get a really big, piece of change, even if they're wrong. I mean, that's the main thing. That's quite bad. There was a guy back in the 80s and early 90s. His name was Chainsaw Sanders or something like that. He was one of the CEOs, and it turned out that he was nothing more than a magician just moving accounts around also. And he also got a huge severance package. Chainsaw Al, that's what it was. I can't remember his last name, but Chainsaw Al. He was with Sunbeam, and anyway, he also got some jail time. He got 2.5 years, along with his, I think it was $100 million or something. Let's get on to what I think is important here, folks. The first chart that I posted in here since the break is the chart of the bonds. As you can see, we made that big ABCD pattern down here. We've had a little bit of a rally. We're approaching the 382 rally of this whole move, coming in at the 168.20 level. That's not very far from where we are right now. But if we take a look at the larger component of the interest rate market, which is the Treasury notes, you're going to see a different pattern. And this pattern is the fact that we are making, if you'll notice very closely in that little red box that I've marked there, you'll see that you're making a very nice ABCD pattern, and it's also at a 382 retracement of the high we made back in August, and it's also the exact amount. In other words, the rally that we had from July to August is similar to the one that we've had here, also in time and price. In other words, it took 2 weeks to complete this. With the Treasury bonds, you don't see this because they're a little bit more, more volatile. And they made a lower low by a tick or two, which of course you can see in the Treasury notes. We did not do this. What does this mean? This is a possibility of being incredibly bearish Treasury note, i.e. higher interest rates. I know that doesn't seem like it's possible, but you want to watch this very closely. Now, the other part of this is, if you notice on the left-hand side, you'll see the bottoms that we had on these trend lines are these 1-3-5 patterns where you have higher bottoms. We could also be approaching that here in the Treasury notes. In other words, if we pull back one more time down into this 130.07 level, then you would be looking at a potential 1-3-5 pattern. But if that pattern should break, that would be the one that would tell you that, yes, we're getting ready to see higher interest rates. I know the whole world does not think that's going to happen, including the Federal Reserve, but that is something that could be happening. So keep in mind that's what's going on. Now, I posted a chart of Twitter because someone asked about it. As you can see, it does follow the 61% retracements and the ABCD patterns, just like any chart that's actively traded and quite liquid. But I guess there's some news out on Twitter today that's put it down about 5%, and it's going to be taking it below those levels, as I recall. So we'll watch it very, very close. Also, folks, you got to remember that when you're looking at the bond market, you're looking at markets that are many, many times bigger than the stock markets. I mean, we focus, in the news and also here, everywhere. Everybody's focused on stocks, but the real action, of course, is in foreign exchange, and then that's followed by the bond market. So we'll see if that's going to be the case down the road. Now let's switch over, since we're talking about money here, and we're going to talk here about the euro, because yesterday what we were doing, since we were talking about this 1-3-5 pattern, you'll notice that we were looking for a 1-3-5 pattern to occur back in August, and we did. It was absolutely perfect. The market dropped a great deal. And what we're doing now is we're looking for that same 1-3-5 pattern occurring here, again, since the beginning of September. So what we want to do is just sort of walk through this. And the reason why I'm doing this, it gives you an idea to see how these patterns form, and it's not, something magical. Well, sometimes it's magical, but other times it's not. But you'll notice here, this is exactly what's happened yesterday in the euro. We went right up into this 112.50 level, and then of course since that time, we've come down and we dropped only about 70 pips from that level, but that's $700, which is it's not chump change. But you'll notice that the pattern is doing. This is what's telling us, folks, is that if we break out of that 0.5, in other words, we get above 112.70, this is going to be a breakout to the upside, is what that's going to be. It's going to be a very powerful one, in my opinion, but until it does that, we are still heading down. I mean, there's no ifs, ands, or buts about it. You can prove it to yourself if you just take a look at the opposite side of that euro trade and look at the dollar index, because the dollar index is 53% weighted by the euro. You'll notice that here again, we're seeing the same 1-3-5 patterns in the dollar index. In other words, the low in the dollar index yesterday was equal to the high in the euro versus the U.S. dollar yesterday, because they're reciprocals of one another. So this is what we're watching. You notice the triangle's getting tighter and tighter? Well, guess what? It's trying to tell you it wants to come out of this triangle one way or another. So this is going to be an interesting phenomenon to see it occur, because we have something really powerful to move once this thing comes out of here. It's going to tell us that we're going to go, a lot lot farther than lot. Well, that's a lot in Chinese means spicy. And my little grandson, he's always when he chews his gum, he always says lot because it's spicy. Anyway, let's get back to the real thing. All right, let's move on to one other one that we were talking about yesterday. That was the copper. Someone had asked us a question about the copper, and here again, we went right up to the exact 61% retracement at this 220 a pound level, and that's where we're trading right now. I think we're trading at like 219 a pound in copper, so it's still at that level. But the fact that we had the really strong range here on Thursday gives you some impetus that we could go a little bit higher. To the 786 in the copper, but not too involved in that. That's just, there's too many other things happening with the foreign currency markets and the debt markets, and also with the stock market, because the stock market is still doing pretty much what we thought it was going to be doing. Now we're going to have a little break here, as we always do, to pay a few bills. But when we get back, we want to talk about the stock market and the Bradley market model, and also some of the side I talked about. So it would be, I think we're going to be getting a break here pretty soon. I hear my timer go off. Well, anyway, if you'll take a look here, you'll be able to see that we've got some really interesting things happening here so far. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're taking a look here at the Dow Jones Industrial Average. As you can see here, we had the same 135 pattern over the last few weeks. What we did yesterday with that big gap up that we had, as you can see, we went right up to the 61% retracement of the high, within exactly 10 Dow points. And so it was, pretty accurate. Now, as you recall, we were watching the New York Stock Exchange Index before the opening yesterday, and my original premise is that we were going to open right at the 61% retracement. However, with the report that came out, there was a really strong probability that we were going to open higher than that. And as we were on the air, of course, we had a big gap up in the New York Stock Exchange Index. And where did it go to? Does anybody want to guess? They will win a prize. Hello, beep, 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 beep. Judge's ruling. Time's up. You're right. It went exactly to the 78% retracement. Didn't get any higher than that. Now, if we break out to the upside here and get above 10,850, I will have to say uncle, and I'm going to say this very, very easily, because if we do that, you're going to see a market that could possibly go up and make new highs like we did in let's think of the name of it again. The NASDAQ has made new highs. And basically, so we'll see if that's going to be the case. But the NASDAQ made a beautiful ABCD and 1.618 expansion up there at that 48.82 level, folks. The high was 48.93. So if we get above 49.10 or so, I would assume that there's something wrong with this. But remember, this is the same level that we had in the NASDAQ when it was at 2,000. It was almost at that 5,000 level. And it was also the same price that we had in 2007, before we had the too big to fail problem that we've got going on. I had a question during the evening last night about Deutsche Bank. It did move up a little bit yesterday with the rest of the markets in the world moving higher. It still looks extremely negative, folks. It just looks like a very, 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 very negative thing. I will try to take care of the small caps for you when we get back from the break. But right now, I've got to go on and cover some gold and silver, because these are the ones that really, are very, very important here. As you remember yesterday when we were talking, I bring this to your attention. I just wanted to show you how some of this stuff, starts to work, and that's really what we're trying to do. You'll notice here on this 4-hour chart on gold, we were looking for it to get up to that 78% retracement up there at that 1346 level. And because we had the really strong move, that usually tells you that you're going to go up to the next level. And so that's what we were watching yesterday morning. And unfortunately, it can't be on all day. But as you can see, what happened, oopsie daisy, let's see, I'm updating it as we go along. I hope I've got the newest update, because we did get up there at that 1348 level. And that has since stopped it, at least for the time being. Now, remember, we did not break out of that trend line to the downside. The downsloping trend line, it did not break above that level. That's telling you that there's something, there's some resistance up into this area, and it's very, very important resistance also. Now, longer term, I think we've got a chance for this to be really bullish, and you've got to watch this. And the reason why, as we mentioned this yesterday, is the fact that you've been in this really tight consolidation for several months, and it's only made a 38% retracement of the whole move. That's tremendously bullish, folks. I'm going to be covering that in the newsletter quite a bit, because I've got to look at these currencies, because we're coming into a really tight apex in these currencies, and that gold will be affected by that also. And so we want to watch it, very, very, very closely, because it's something that will mean something, very, very much. Now, also on a Fibonacci front, yesterday we had a rally, as this market has been going down for quite some time here, for well over 2 months, and we've had a perfect 61% rally in the Dow Jones Utilities. Now, that usually affects interest rates, so that's another one that looks interesting. It's getting ready to I think it's getting ready to turn to the downside. As a matter of fact, as you can see, you had a very, very narrow ranging day with the high right at the exact 61% retracement. That would determine that it's not as powerful to the upside that you would like to see. So that's the main thing that I would sort of be keeping an eye on when you're looking at the stock market today, because it's got a very high probability that we could see some movement to the downside. That's the bottom line of what we're looking at right here. So far, markets are down. Oh, they're basically it's like taking your sister to the junior prom. There's hardly anything going on over here. The markets are very, very quiet, down a couple points in the Dow, a few points in the S&P, NASDAQ up a little bit. So let's double check that NASDAQ, because I wanted to give a correct price, and I'm not getting that data for some reason. It is up a little bit. No, it's actually down a point or two. Anyway, this is the main thing that you want to sort of focus on, because you've got to look at some of these things. Very, very interesting. Now, what I'll do here is I will bring up the chart of the, I've had a request to take a look at this NASDAQ anyway, so if you'll give me a second here, it'll only be very, very shortly. We'll be able to get this up here, and I believe it's right here. There we go. You'll be able to take a look at the NASDAQ, and then we will take a look at the I don't use the Russell TF. What I use is the IWM. I have never traded the E-mini Russell. I just don't have any interest in it. I probably ought to take a look at it. But if you notice that this IWM works okay, and here again, that's an ETF, and I don't even trust those. But the IWM is also a pretty good one. But if you'll notice here on this NASDAQ, this is mother, God, and country stuff. If you like pattern recognition and Fibonacci numbers, folks. I mean, you got an ABCD pattern, which, Gartley said that was the start of everything. And then, and also Andrew Lowe did that too. But if you'll really look at this, it's got some major numbers up in this area of 1.618. This is the same type of move that we had, back in 2000 and also 2007. Whether that's going to mean anything or not, I'm not absolutely sure. Okay, now we've had a question about the corn market, believe it or not, from one of our listeners, and basically what they asked me my opinion on the corn. And if you're taking a look at the corn market, you'll see that we've been in a pretty tight trading range since August. It's been in a trading range of about 35 cents, which is $1,500 in the corn. So that's a pretty good trading range. But as you notice here, that we have a potential here for the corn. If it could back off one more time down to this 325 a bushel level, we would be really very, very close to a perfect head and shoulders pattern, and we would also be right at a 61% retracement Gartley pattern. So you'd have a head and shoulders pattern there and a Gartley pattern coming in at the same time, which is a very powerful formation. Doesn't always work, but it is powerful. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal capital is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I'm posted the chart of the IWM. As you can see here, we have actually gapped up today, and we've taken out the high that we made last week. So that could be a potentially bullish thing. But again, I don't trust them because it's a ETF, and I don't particularly like those. Now, if we take a look at the E-mini Russell, you'll see here that we're very strong this morning, and we're almost at the old high. Now, if this just takes that old high out by just a little bit, like we've done in the ETF IWM, that really won't make any difference. But frankly, this is a very, very small component of the market, and if you're going to trade it, I guess you should just only look at that one and don't look at anything else, because it really doesn't have an effect of the main thing with watching some of these things that we're taking an eye on. So that's about it. That's basically what I'm thinking. Oh, we've had a question about the grain markets. I'm going to have Rich Anderson on early next week to give us a pretty good idea, and we'll see some of the things that he's watching. Remember, we're into harvest now on some of these things very, very closely here. But some of the corn's being harvested right now. Beans will start to be harvested in October. The only thing that would change anything would be a hard freeze really early in October. That would affect the grain crops quite a bit. But other than that, there shouldn't be much of a difference in supply demand, since that time. We had one other question from one of our listeners about the natural gas that we wanted to talk about. We have been, we'll be looking here we'll be looking here at the ABC. They said, Mr. Z said that they're harvesting beans. I didn't think they harvest, well, in Indiana they didn't, but maybe the crops are different now because of all the hybrid stuff that they have. Yeah, we're almost into October. Yeah, that certainly could be. Yeah, we're into fall. That's no question. Anyway, if you'll notice here at the natural gas, there's several things to pay attention to here. If you'll notice those little red boxes at the top that are marked 1.618, those are 1.618 expansions from several different swings. As you can see, you had a beautiful butterfly pattern forming up there. At that time, the high was being made, a perfect ABCD structure from early August and completing day before yesterday. And then, of course, it started the move down. I would expect this to give us a pretty good correction in this to the downside as far as the natural gas, part of this. So we'll see. Right now, we got the Dow down. See, the Dow's down 40 points. The S&P's down 4. The NASDAQ is probably down. NASDAQ is down only 13. So we'll see if these markets will have much of a correction today on a Friday in an up week after the fact that we were almost in a down week. And then when the Federal Reserve came out and told us that everything was going to be wonderful, the markets had these tremendous rallies where they, run everything up and then they stop, and then they run everything back down again. So we'll see how things are moving to the upside. Yes, I understand that the NASDAQ is being influenced by the IBB, the biotech. But remember, those NASDAQs, you're only looking, that NASDAQ 100, you're looking at about 30 stocks that are the really big ones. These are the ones that are the high cap stocks that are very expensive. Facebook, Amazon, Google, those are the ones that are, the really big ones. But you have some other of those IBB stocks that are absolutely very, very expensive. But the trouble is they don't have the capitalization that you have, like you have with Google and, Amazon and stuff like that. So I think Bezos got to be pretty close to being one of the most richest men in the world by now, I would think. We'll see. I don't know. Okay. Next question. Someone asked what we were going to be looking at as far as the silver market. And if you'll give me a second here, I'll show you where we are. We went up and tested that 20, a little above the 20 level. Here again, we were not getting the breakout characteristics that we were talking about. That we said that if gold gets above, and I don't know if it's going to do it today or not, but we have to watch gold above the 1360 an ounce level, because if it breaks out above that, folks, that's we've had a very, very high level consolidation. What I mean was, since we topped in gold a couple months ago at 1380, we didn't go down very much. We just didn't even make a 382 of the last retracement. That's all we could make. And if this were really a bear market, it would have given up a lot more than that very quickly when that high came in, and it didn't do that. And so that's telling us that this has got a possibility. It's got to do it. I mean, you have to prove that it's going to do it, because all it takes now is a failure below last week's lows at 1309, and you'd be looking at that level that we'd like to see, which is around 1270 an ounce. But that's a little farther away, but you want to pay attention to that, because that's a big thing. We've got a lot of triangles forming. We got triangles forming in the interest rate markets, huge triangles in the foreign exchange markets. These triangles are pennants, mean they're getting ready to break out of these one way or the other. So these are the things that I think will be controlling the market. They're much, much bigger than the stock market. But everybody has the wonderful thing of they want to watch the S&P all day long, which is probably one of the most boring things you can do in all of technical analysis. But we'll see that. Now, we need to take one more look here. We're going to have a break here, but this volatility index, we did see this bottom coming. We went right up to the exact 61% run of the previous high was at Brexit, and now we're coming down. And here again, you see we had the 135 pattern before the big move up, and then the market came right back down again, saying that it was not ready, and whether it's going to make a new low or not, we'll have to wait and see. But this market, I still think, offers the best potential for something really dramatic to happen in the markets, because there's just no fear in the markets at all. These bankers, they come on and they give them a line of baloney right to our Congress, and this is not fair, but this is what we have to live with, because these are the rules that we have. Someday someone's going to come in and say enough is enough. If you're going to do things wrong, instead of paying fines like $40 billion, you're going to go to jail for 5 years. And guess what, folks? This shenanigans would stop immediately. That would be the main thing that you look at, because when you do things wrong in banking, like Wells Fargo did, and also the J.P. Morgan, you shouldn't be fined. You should put the people in jail. I mean, that stops it. If someone robs a 7-Eleven for $50, they get 10 to 15 years. These guys rob billions and they get a $200 million golden parachute. Where's the you wonder why some of these people are out there complaining there in Raleigh or in Charlotte, is the fact that it's a little bit different for some people other than others. So we'll have to wait and see. We'll have to get back and go over the stock market thing one more time, because I know that's where the interest is. But you got to pay attention to these foreign exchange markets, folks, because these are the big movers. They have tremendous volatility, great liquidity, thousands and thousands and thousands of times bigger than stocks and even bonds. So that's the main thing that you want to be looking at. So we'll see. It is fraud. You're absolutely correct, Duffy. Wells Fargo did commit fraud, no question about it.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a look here at the gold market over the last 7 weeks. As you can see, we made that high, way back in August the 1st. That was a secondary high, of course. The other high that we made was at 1384, but that trend line still exists. Now, if you'll look at the bottom of the chart, you'll see a green line that says 382. You'll also see at 0.08, that was the 382 retracement that we had on September the 1st, a month after the high that was made. You'll notice that the sloping downtrend line, yesterday we stopped at the 78% retracement. That's because we were looking at a 30-minute chart. This is where we are right now. Now, as you can see, every time we went up and touched these lines, we've had huge corrections. The last one was $55 to the downside. But what we're looking for, should we get above 1360 in the gold, I would have to think that this would be the place to maybe try to think about getting long. Now remember, I said the way that I wanted to handle this is I wanted to see $11 or a $17 correction. Well, last night, all we could do was go down $9.90. We didn't even make a $11 correction. Now, we could take out the highs, but that correction would tell me that if I were to trade gold from this particular level, my stop would have to be $10 because that's the amount of the last correction. So if you go past that, that's telling you that something's wrong. So at that point, you have a place, to control your risk, and that's what we're looking at here. But above 1360 in the gold, we got to look at this, folks, because this thing could go to way higher because of that 382 retracement that's taken 7 weeks to complete. That is incredibly bullish. The last time we've seen anything that bullish was when the Japanese yen was coming off the bottom at 75 when Tom was talking about King Dollar. That happened at about the 93 level before it went to 126. So this is the same type of a pattern that if we get above 1360 in the gold, this has some legs. Have a wonderful weekend. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.